Let me know if it needs to be louder or if you can't hear me. Behind the scenes, I have my dear friend Jeff, who is going to be kind of filtering your questions. So if you have questions, just send them through the chat, and Jess will kind of filter them all and make them so you can ask what you need to ask. And we won't, that way I won't like answer the same question 5 times, hopefully. That being said, those of you who've had me in a real face-to-face class in the past when I used to teach for the SBDC know that I'm totally okay with being interrupted for a question. If it's not relevant to the topic or I'm getting to it later, I'm going to tell you that and move on. If it sounds like a good place to answer that question, I'll do that, because I've done this enough to know that most folks, if one person in the class asks the question, there's at least another 5 or 6 that have it as well. So so that's what we're going to talk about. I'm gonna say briefly just this, because a couple of people have already asked me about EIDL, because I guess today is the last day to accept it. If you have one of those in the pipeline, give me a call at the office right after the webinar. So, and I will let Mary know to put your call through. So, and we'll chat briefly about those issues. I had not planned on doing the EIDL today. So, so the PPP loans, most of the folks that are on this webinar are actually clients of mine or friends of clients of mine. So just to let you know, so I kind of know most all of your situation, and I'll try not to get too personal if you ask a question and, you know, say things about your business you don't want said out loud. I'll do my best on that. And the other thing is that this is still a moving target, and there'll be some places where I'm going to tell you where the moving targets still are and the things we don't know, some of which are actually critically important to me helping you all plan for taxes this year. So that's the one thing I'm not real happy about, is that they have not gotten that settled. So with that, so as just as an overview, I'm going to go through first an overview of the original PPP requirements, and then the Flexibility Act, which was passed at the end of June, and what advantages there might be to taking 24 weeks versus 8 weeks, and then what some of those costs are going to look like and how we're going to document those. And then we'll just kind of talk briefly about what is the application process, where are the big pitfalls. Those of you who are my clients who are on the call, I full well expect to see your completed forgiveness request before you send it to the bank. Before you send it to the bank, so that we can make sure there are no things that are going to get disallowed. Because the biggest thing we've learned out of the Flexibility Act is if the SBA disallows one of your costs, they will expect you immediately to reimburse them for that cost. There is no, it can be added to the loan, anything. It will be immediately you write a check for that amount to the SBA. And I don't want any of my clients to fall into that trap. So that being said, the first thing when we're looking at with the SBA is going to be looking at you, whatever business owner signed the PPP loan or person signed the PPP loan, that person is going to be making a self-certification to the SBA, basically saying, yes, the funds were used to either retain workers, finance payroll expenses, make mortgage, rent, and utility payments. Okay, that the current financial uncertainty is what created the need for the loan. You did not have to prove that you had any kind of liquidity sufficient to pay it off, or that you had been turned down anywhere else. So but you do have to honestly be able to say you needed this money to get you through what we've been going through in the last 5 months. I think it's been 5 months. God, I don't know. And it is a perjury offense, which is felony, which is a federal crime. Yes, it's white collar, but I doubt they're going to send you where they sent Martha Stewart. So just know that. I don't believe any of my clients are in any danger of that, but there's just this huge precaution from some of the leaders directing us, our CPA education, that we need to make sure we warn you of that. So now we're going to want to kind of go through the differences in the two laws. One in prior law is how it was originally, and for folks who got their loans prior to June 5th, they can choose either to be covered under the prior law or be covered under the new law. Okay, everybody after June 5th is automatically under the new law. They don't get the 8-week things. They don't get some of the maybe advantages. So there was, we couldn't have under the prior law, we couldn't have a head count reduction. We had to hire people back by 6:30. Now there's no head count reduction, which means if you don't have the same number of employees now as you had on February 15th, they could say, okay, part of your PPP loan will not be forgiven. So they just gave us 6 more months on that, basically. Okay. The next one is there's now a safe harbor. So if you can honestly say to the federal government when you file for your forgiveness after 24 weeks, no, it was not possible for us to come up with the same number of employees we had in February. Just was not physically possible, given, I mean, I know that like Oregon, our restaurants just opened 2 weeks ago, so and we're now going back to masks for everything. So it's going to be hard to say, especially in our restaurant industry. If you've got a restaurant, this is your saving grace. If you have a restaurant or a retail store that cannot do the volume of business they had been doing, so they don't need the employee count that they had before, the reduction in the safe harbor reduction is your saving grace this year. So that was a good thing. The term of the loan under the prior year, it was 2 years, and it can be up to 5 years. The loans before June 5th are 2 years unless the bank approves you extending it to 5 years. And my former banker clients will tell you, I don't think there's a bank that's going to take a 5-year loan for 1%. The loans after June 5th automatically are 5 years. So the original law, we were going to see us having to make payments, which had me scrambling most of the summer, thinking I was going to have a bunch of people having to file applications, so they got forgiveness before the payments were due, and now there are no payments due until the SBA actually forgives it. So that's a good thing. The 8-week covered period, that's been the thing that's probably been on the news the most. It's now extended to 24 weeks. And so if you got your loan before June 5th, you can choose 8 or 24. So for myself, example, within 8 weeks, I spent all my PPP funds. I will actually probably stay with the old law and get it over and done with and through. Now, I have other people that I know that either barely got their funds at the end of May and weren't even able to open until sometime in late June. So they're not able to actually spend it in 8 weeks. So that's a case-by-case basis. So the 75% test used to be that you had to have at least 75% of the costs had to be used for payroll costs. That requirement has now been eliminated. You can choose to use more than 25% for eligible costs that are not related to payroll. Um, they have a new 60-40 rule for forgiveness. You have to have at least 60% payroll. So that allows you up to 40% to be used for other business expenses that are allowed. The big thing happened here with the deferral of employer Social Security and Medicare taxes. Under the prior law, if you had a PPP loan, you could not take advantage of the special deferral of taxes. Now we can. So some of you, we may be deferring some of your Social Security and Medicare taxes starting in this quarter. So starting with the July payroll tax reports. And then the other thing is they very much, the bill that was passed at the end of June very much gave us some very specific things that whether you're allowed to use it and whether it's going to be eligible for forgiveness. And so I've got a couple of slides in here. I put PDFs in the chat earlier. If you have any trouble downloading something that you want that's in the PDFs, just email me and I'll get it to you. But as we know, payroll costs are there. In a few slides, I'm going to go over how we calculate that. Mortgage principal and interest. So that would be if the entity who got the PPP loan actually was the one who is paying the mortgage principal and interest. So it's not your personal mortgage principal and interest that it will pay. And the property has to have been purchased before February 15, 2020. Interest on any other debt is allowed, but it's not forgivable. So that would go into a loan that you would pay off over a period of 2 or 5 years, depending upon which the bank would allow you and when you got your money. So, so anything that says it's use and it has a green, we can use the money for that. It's just, unless it's also forgivable, you're going to pay that back. So yes is great. Yes, no is okay. And no is like, no, we don't want to go there. That's where you're writing the Small Business Administration a check. So utility payments. And again, they have not really defined security payments. One of the things that we keep asking about is, what about security? Because most people who have offices have security, especially if they have any kind of property in there. And so those are allowed. Those are also forgiven. But the service has to be begun before February 15, 2020. That's the official date of the disaster, is February 15, 2020. So everything hinges upon that. Then other items that are not allowed, where I got this, they use the example, taco shells in a Mexican restaurant are not an allowed use, and they're also not a forgivable use. So basically inventory is one of those things. Travel costs, if you have travel costs, those, you cannot use the PPP funds for that. Now, that being said, I know that if I'm not having to use the money from my sales activity to cover my payroll, then I've got more money to spend on my inventory replacement and those kinds of things. So I kind of understand why they put it in the law, but it's very frustrating because it requires a little more specific accounting for y'all for this year. So then payroll costs. So some of the things, principal resident of the employee has to be in the United States, no expats, and be paying somebody who works in a foreign government, in a foreign country. So it's the gross wages up to $100,000. That didn't change. Over $100,000 is not a problem. You can pay somebody over $100,000, but they're just not going to get relieved, and it won't be part of the PPP money. It has to come out of some other money. If you have leased employees, oh my God, that's the easiest way to go, because you can easily show that. Then cash tips are also included in gross payroll costs, any expenses for separation or dismissal, you give them 2 weeks severance pay. Any vacations you pay, parental leaves, time off, all of those things are valid gross pay. Remember, it's going to be $100,000 per person is the max per year, which in the 8-week period is $15,800 or something worth of gross payroll. So that there's a limit, but you can include that. So payroll costs also include payment of the group health insurance. Now that is the part that the employer pays, not the part the employee pays. And it does not include S corporation owners. S corporate owners, we're out of luck. It also does not include self-employed folks who are not on a group plan. Retirement contributions, that is the employer's portion of whatever your retirement is. If you have a simple plan, a 401k, whatever, that portion of the contributions is both an allowed use and a forgivable use. So, did that come again? Oh, this is the payroll tax costs. So, this is a little confusing to me because I've been like fighting with people that the employer's portion of the Social Security and Medicare costs are not forgivable expenses, but the employee's portion, if you're taking gross payroll, you're fine. So it already includes that. The state and local taxes withheld are also not, you can pay those taxes, but they're all included in anything you withhold from an employee's paycheck is included in that gross number to start with. So the big things are that any federal matching employer taxes cannot be. So all your Social Security and Medicare matches, your federal unemployment cannot, but the state ones can, including our statewide transit tax. Workers' comp insurance is not considered payroll costs, which that's a bummer for some of my construction people because that's a big cost. So, okay. So that's kind of just an overview of the things you can and cannot do. So most of you have already gotten your funds. Some of you have actually spent most of your funds even. So, and I talked to a lot of folks when these started coming out in early April, and I said, yes, make a separate bank account. The SBA is saying, yes, that is the best practice. That doesn't mean that you can't, that if you didn't do that, then it just means it's more difficult. So I think most of the people I talked to before they got the funds, I had them do that, either put it in a savings account and then pull it over as you needed it, or, and I'm saying the worst thing you could do is just let them drop that money into the general operating account. Because what happens is your general operating account, you have the PPP loan money, you have all your sales money from products or services or whatever. How can you prove to the IRS that you paid payroll, or the SBA that you paid payroll out of the PPP loan? So that was why we were saying, yes, do that. Do I think they're going to really get nitpicky about this? No. They're not going to probably even really investigate these things unless they suspect some kind of a fraud is going on. So I'm not going to worry too much about it as long as we can prove that we had payroll coming in and we have sufficient money going out for other expenses that we can justify that, yep, we needed the PPP money to pay those bills. So this is just another way of putting it. So, so the separate accounting, I think most all of you I have gone over. I've gotten some spreadsheets from a couple of banks that are really helpful. If you haven't gotten those yet and you need them, let me know and I'll email them to you after the webinar. It's just, when you file your application for forgiveness, there will be a whole slew of documents, including some kind of an accounting for, I got the money in on this date and I spent it. This is how I spent it. I got it on April 13th. I spent it, I had a payroll on April 20th. I had a payroll on May 5th. And you're going to tell them each place where you spent money out of the PPP. So, and their issue of if you can't prove it, you're toast. But like I said, I really do not believe that that's even going to become an issue for most folks. So just so you know that. So, how come it's not going now? There we go. Okay. The burden of proof is on you, the person who borrowed the money. If not all of the loan is forgiven, it then becomes what's called recourse debt, which means that you've personally guaranteed it, and the origination fees may not be given back by the ASBA, so your bank may be looking for those. There's a lot of good reasons to make sure we have a nice, clean trail of the money came in and this is how it went out. And for most of y'all that I know, it's not going to be an issue. I haven't seen anybody yet where that's really going to be an issue. So some things to think about. So some expenses that are not covered that they did not make clear until just now were that self-rentals, meaning y'all who have home offices, you can't pay your home office expenses with this money, okay? What is not clear is, and this is where the questionable cost is, that what about self-leases, which in the instance of company ABC owns a building, rents it to company XYZ. XYZ gets the money. Both companies are owned by the same people. Can we get? Is that a legitimate use of rent payment? And the answer is we still don't know. It's still out there. Everybody's been going under the assumption that self-rental does not include where we're renting one company to another company, as long as we don't violate this bottom thing where your rent is that you're paying the other company is unreasonably high. As long as it's market rent and we can show that it's, if somebody completely unrelated to your other company were renting that space, you get the same amount of rent, we should be fine. And that's what we're going on now. With the 24 weeks, I'm thinking very few people will actually have rent in it because 24 weeks will mostly use the payroll. Because there's payroll is just a given, and there's no questions about that. So things that are allowed that are not forgivable, what'll happen is you will be able to convert those amounts to the 2-year loan with a 1% interest. So most folks that I've talked to don't want to have to pay anything back. But there are some good reasons why you might want to. And that's just, if you spend on allowable, but it's not forgivable, it's not a harm, it's that green and it's that yes-no combination, then you're going to have to pay the money back to the SBA over 2 years at 1%, but you're not going to be in violation of anything else or have to be worrying about fraud or anything like that. So I think that's a good thing. So this is probably one of the trickier areas. Is there's 8 weeks in the first. The borrower can choose to either have a covered period be 8 weeks starting with the day that you actually receive the PPP loans, or it can be the first day of the next pay period. And there are pluses and minuses to all of those, and it allows us to kind of not worry so much about. Originally we were doing some things like, oh my God, am I going to have to run a special payroll on June 30th to spend the rest of the money? We're not in that situation anymore. We don't have to run special payrolls. Even if, your covered period ends, say September 30th, you hit 24 weeks and you don't pay your September payroll tax payments till October 15th, you're still okay. So that's what the bottom part of, when the costs are incurred in payments, they can be outside that. the 24-week or the 8-week period, depending on which one you choose. So that was very helpful to us. One of the things that we were all going, what? Am I going to be able to do this? So some special owner employee rules. And I've had this question quite a bit. Owner employee is generally you'll find those in S corporations or in C corporations. The owners, their compensation cannot be more than $15,385 for the 8-week period. Okay, period. And if what they were paid in 2019 is significantly less than what they're earning in 2020, they won't be able to take it. It will be 8/52 of what they paid themselves in 2019. So that's not a straight, what did you pay me, and I get to write that off. So, and if an individual is working through several businesses, we got to add up all that are all owned by the same entities or people. We have to add up all those together. And then, as I said before, the eligible health insurance premiums for S Corp owner employees, nope. So that was kind of frustrating to hear that one. So self-employed. So these are my folks that file the Schedule C. The amount that you can be forgiven is dependent upon what we had on your net profit on your 2019 Schedule C. I'm pretty sure it's line 29 or 30. If you get any more money above that, it has to be spent on qualified expenses and then converted into a loan. So it's really going to depend on how much money did you make in 2019 is what drives how much of your loan is forgiven. So I think that this is one place where being a self-employed person with a Schedule C, you have the best of both worlds with this thing, because the government just gave you tax-free money, which I think is amazing. Yes, we have to file some paperwork for it, but they just gave you tax-free money. So that's kind of a cool thing. So partnerships, same general kind of thing as a self-employed person, except that there are more than one person. I'm not sure any of my partnerships got PPP loans. So, but if they did, pretty much partners who are general partners in a partnership and Schedule C self-employed folks are treated the same. So let's see. Non-payroll costs, we talked about that. It's okay. So it's mortgage interest, rents, utilities. Those all have to be in the covered period, either incurred or paid. So this clarification then meant that I had several people that said, well, I haven't paid January, February, and April, or February, March, and April's rent. Should I go and pay that back rent? What they're telling us with the revised rules is, yes, pay that back rent. You're good. So I thought that was pretty interesting. I did not expect them to do that. So that's nice. Yeah. So there used to be a provision in the law, in the old law, that if your gross pay went down by more than 25%, they would be reducing your eligibility, that amount from the loan forgiveness. Now with these safe harbor rules in the Flexibility Act, we don't have that problem anymore. So that's a good thing to know. And the same thing with the full-time equivalent numbers. And the new rules basically say, as long as you can tell us honestly that you did the very best you could to rehire your employees and bring them all back into the workforce by December 31st, by 24 weeks or December 31st. Some of you who got your money in April and May, 24 weeks will expire before December 31st. So it's the sooner of 24 weeks or December 31st. So those of you who got your money in that haven't yet got it and probably will have it in the next week, you'll have it until December 31st. This is what to your good faith effort has to include. You have to give them a written offer to come back to work for the same salary before the cut. The offer has to be rejected by the employee. You document the rejecting. And here's the one that's the kicker. You got to rat them out to unemployment. If you don't want to be dinged for them not being, for not, that FTE not coming back to you, you got to turn them into unemployment. Because the reason that a lot of them are doing it is because they make more money on unemployment than they made in the job due to the extra $600 a week. Yeah. You also can exclude somebody that you fired for cause, either involuntarily resigned or requested a reduction in hour. So I know I got a couple of you that have that. So they really made it much easier for employers to not be bound by that 75% of the FTEs that the original law required. And I'm very grateful for that because we were all sweating that one. So this is how we calculate how much you get forgiven on. If you have, say, $8,000 in payroll costs, the maximum that you're allowed to have in loan forgiveness is $10,677. If you got more than that, that's either a loan or now that has gone down. The Flex Act, it's now $6,000, 60%, not 75%. So that is one of those places where if I take the 8-week problem, I'm stuck with 75%. If I go ahead and opt for the 24 weeks, that falls down to 60%, which can be very helpful for places that have high retail rent, and I know some of you do. So yeah. So, and the PPP forgiveness is going to be the lesser of the amount of the actual loan, meaning they're not going to forgive you more than they give you. The total of all the forgivable costs, or the payroll cost divided by either 75% or 60%, whichever one you're choosing. So, in this instance, example, they got a loan for PPP loan for $12,000. Their forgivable wages and costs were $9,800, and their payroll costs, 75% of their payroll costs were $10,677. So they get the lowest number of that. So they would be forgiven $9,800. The rest, $2,200, would become a loan if it was used for qualified expenses. If it was not used for qualified expenses, you would be writing a check to this SBA for $2,200. So these are really simple numbers. They're low, but we're going to go through. I have the spreadsheet I will send, if I haven't already, does all these calculations for you. So you just have to put in your numbers, and it will be taken that way. So on this, if the borrower, so you is not able to prove the cost, then they won't forgive it. So how we're going to prove the cost is documentation. It'll include copies of invoices, your payroll reports, interest statements from the bank, copies of canceled checks for your rent, copy of utilities, either the bills or the payments, however you made them. So, like I said, there's going to be a very large stack of documents you're going to be sending to the SBA. So much for the Reduction in Paperwork Act. The backup spreadsheets that prove that you actually met all the requirements, and you got to keep that for 6 years. So just know that you're going to have to keep that all for 6 years. Now, with documents being electronically saved, it's probably a moot point, but we do have to remember to keep it. So here's some things they have not answered for us yet. One is, what about self-insured health plans? There are some companies that have self-insured health plans. Are their premiums going to be covered? The special rules about self-charged rent, we already talked about that. They have not given us an answer where we've got the owner of the building is related to the company that's renting it from. We don't have clear guidance. The only thing we have clear guidance on is home office rent. That's it. The 2019 employers retirement contributions, if you played those in early 2020 after you got the money, does it count? They haven't answered that one. My feeling is no, but yeah. And payroll costs of an S Corp shareholder over and above the $100,000 because we have pass-through income. I don't think they're going to allow it. You can make bonuses at the end of your covered period. So we get to the end of the covered period. As long as they're not already making $100,000 a year, we'll figure out what that amount is we can pay them and write them a bonus check. So the 75% rule has been now relaxed, and it's highly likely that they're going to take that 75% payroll rule completely out. This was under the, do we need to rehire someone on the very last day of our reporting period so that we make sure we get the rules down? And will the rehire rules be beyond June 30th? They haven't answered that. Well, they have answered that in that the answer is no, unless they change it retroactively because it didn't get changed today. So, yeah. I'm going to stop and go through a couple of the things I see in the chat because the next section is really the nuts and bolts of how are we going to do this? You know, how do you actually put the money in and do the actual documentations? We're not going to go through each form, but it's an overview of the things that you're going to be required to do to get your forgiveness. Let's see. So there was a question about money in
Jax, if you want to scroll up to John Bloomgreen, I might be saying that wrong. That was the first question, and specific about payroll taxes.
Which one?
Scroll
up to.
I can just read it to you if you like.
Sure, just read it to me. Yeah, that's probably easier.
I'm confused about payroll taxes. When we set our separate checking account for using the PPP funds, we set up our payroll provider to deduct all payroll expenses from that account. Every time we've conducted payroll during this time, the payroll tax payments, both employee liability and employer withheld, as well as the payroll processing fees, have been automatically deducted and submitted to the IRS. Are any of these non-wage employee taxes considered forgivable? Will we have to pay the non-forgivable taxes back right away or with terms at 1%?
Two things. You will not be given credit for the non-forgivable taxes as payroll costs. And the only ones those are the federal Social Security, Medicare, and federal unemployment the employer pays. Those are the only amounts. The way that's been described as being set up is perfect. That's exactly how that's exactly actually how I did mine. But when you report it, you don't have to, the federal portion of those taxes is not a forgivable expense. You can either choose to pay for it out of other funds, or you could, if you say you want to use PPP loans for it, it is an allowable expense, but you would be paying it over the 2 years at 1%. You would have a loan at the end of it. So most folks, unless that those federal taxes is just way high, are choosing to go ahead and pay with the federal taxes with other funds and just not report them when they ask for loan forgiveness. So.
Okay. Yeah. You want me to keep reading?
Sure.
Okay. PPP can reimburse for sick pay, but not under FCA. Can you do more or provide more details on that?
So sick pay, No, I would have to research it to provide more details. You know, this is federal, and then we've got what state does. So I don't know. I'd have to
Okay.
look it up. So, and I will.
And then I think
I think I remember who did that one. So, yeah.
Okay, and I think you just touched on this, but just in case, state tax is covered under PPP, but not federal, correct?
That is correct.
Okay. And then you had mentioned starting a separate bank account for PPP or put money in savings, and this person's already used a portion on last payroll from my general checking account where my PPP funds are. Should I still move my money to a different account or a savings account? I'm an S Corp and filed a Schedule C. Do I calculate my 2019 gross income to figure out how much owner's comp I get? Well, I guess it's two questions.
Right.
So I guess part one is some of the money's already been spent out of the general checking account. Do you move it anyway and or add more so that it's the total amount into an account and then start again? And then the follow-up question is about calculating gross income to figure out how much owner's comp they get. Did they use 2019 to do that?
Right. Yeah. So I would, if I was in that situation, yes, I would take and open a savings account, put the rest of the PPP money that was not used in that first payroll that's allowed into that savings account, and then draw it out as the payrolls are being paid, rather than having it just sit in the general checking account. It's the commingling of funds that where if they want to be nasty, they're gonna say that you didn't really spend PPP on payroll. But if you move that money over into a separate account, the day before you run payroll, you know payroll is going to be take this much money out of my checking account. I move that money from the savings back into it. It's like I'm showing, yes, I am using the PPP money to pay that payroll. So even though one payroll is already gone, I would still do it. And then as far as the second one is concerned, that is one of those things I was saying they haven't answered the question. You have, as an S Corp owner, you have a W-2 that you get, and you have a K-1. So what is your total gross income? Is it the W-2, or is it the W-2 plus the K-1? And they have not answered that. Most folks I know are going with that we're just taking the W-2 wages, and that's what we're counting as PPP compensation. If I get further information, I will definitely be talking to my S Corp owners who might be able to pick up some of their K-1 money through the PPP. So, but at this point, they haven't answered that question yet. I wish they
You are doing great on this pop quiz. Would you like for me to keep going?
Just keep going. Let's get through those, and then we'll go on to mechanics.
Fantastic. Next up, what if I have hired replacement staff for those who've left?
Yep, 100% perfect.
Great, high five.
Yep.
Next up, regarding the FTE headcount requirements, when we got our funds, only 20% of our staff agreed to come back onto payroll, those being the ones that were not able to get their unemployment claims processed. We inquired verbally with the remaining staff whether they wanted to come back onto payroll, and they verbally declined because of the enhanced unemployment insurance benefits available to them. We did not get anyone's decline in written form, nor our offer in written form. We did not report these folks to the unemployment department. What does this mean for our forgiveness eligibility? Additionally, we have decided not to reopen our restaurant, and we're hoping to just use the remaining funds as a loan at 1%.
Right. And the first part of that question is that the only way you can, the employee always wins when it's employer versus employee. The employer said, the employee said, employee always wins. So if you don't have it in writing, it didn't happen as an employer. That's just the way it is. So it could put you at risk. I mean, yeah, you're going to swear to it and say, yes, we offered it and the things that you did do, but you are at risk of having them turn it down. And the big caveat is not having turned them into the state unemployment when you offered them employment. I mean, that is kind of one of the key indicators that they chose not to come back to work, because when you send the unemployment and say, You know, we offered them their job back and they said no. That's probably the only way you can prove it if you don't have it in writing. So, you know, it's kind of you don't even have any of the potentials to let those FTEs be kept exempt. Now, that being said, there are rumbles that the whole FTE nonsense is going to go away completely, but it hasn't yet. So until it does, yes, you still got some potential dangers there. Yeah.
There's 3 more, and then we are caught up with the queue.
Awesome.
Okay. What happens if you lay employees off after the end of the forgivable period, yet before the application date?
I would not recommend it only because it looks funny, but if that's what you have to do, that's what you have to do. If, you know, the one thing that does is that goes further to prove that you truly did need the PPP funds in order to continue on keeping your staff. So yes, it's technically allowed. You just have to think about what does that look like, and am I gonna, you know, it shores up one thing, but it kind of is like, okay, you were just hanging on to them so you can make that percentage. That's why we're hoping the whole FTE percentage thing goes by the wayside, because it is really kind of silly. Yeah.
Okay. In S Corp, does employee 100,000 payroll limit change if you elect for the 24-week option?
Nope.
Okay. What steps do we take to choose either the 8-week versus the 24-week plan for spending the funds?
When you file the application for forgiveness, that's when you make the choice.
Okay. And then one more snuck in. I have a couple staff that can work virtually but choose not to because they are taking care of an older adult who is susceptible to COVID. That's in quotes. Do I report those staff to unemployment department? They can work from home and choose not to.
In those particular instances, that sounds like something that, you know, it's probably one I might choose to do that with. If it were, they couldn't come into the location because they're taking, on the off hours, they're taking care of somebody. That's one thing, but you're not asking them to leave their home where those people are. So I do know that you can exempt any employee. If you offer someone in a job back and they can't because someone in their household has susceptibility or the danger of them bringing COVID home from going back out into the workplace, that FTE can get exempted. I do know that. Whether the fact that you offered them homework and that's still kind of not real well defined, but it's possible it could, because one of the things you can also do is, so employees who don't come back to work because they have no child care. I guess if you're taking care of someone at home who has compromised immune system and has no other way to get their services met, I could make that argument not to go ahead and report them, that they probably would qualify for an exemption from the FTE count because of that. So these are all reasons why we want the FTE count to go away, because so many of these things are gray and we don't really know. So the one thing I am going to say about the 8-week period, because I know that some of my clients, myself included, have gone past their 8 weeks and could technically apply for their forgiveness right now if they wanted to, the banks are not ready to accept them. The banks are saying it will be at least mid-July before they're even going to consider taking your application. So, so we have some more time for the government to make its mind up, or not, about some of these questions related to FTEs and related to, can I just carry it over as a loan, or what can I do with it if I don't have the FTE? So that's kind of what we're hoping for.
Excellent. There's an amazing amount of stuff in your head. I think that's incredible. And as I'll go back to mute, you can take back over. I wanted to remind you that you mentioned at the beginning that you're going to share some PDFs. So if you want, you can upload those files into chat, or you can email them to me and I'll do it while you're talking.
I actually put them in the chat before we even began. They're at the very top of the chat.
So I do not have them. Before it all started, they didn't seem to properly upload. So you'll have to do it again.
Okay, I will do that then. Okay. So so once you have your packet all ready, I've looked at it, you've looked at it, we all agree that it should pass. And the things that we want to pass will pass, and the things we want to carry into a loan will be carried into a loan if that's your situation. Then it's going to go to your lender. Your lender's going to review it. They may request more payroll documentation or other documentation. They have 60 days to make the determination on all the documents, and they may approve it in whole or in part, or deny it altogether. This is at your lender level. It has to get through your lender first before it goes to the SBA. And they've been saying that people less than, if you got less than, God, did it go, it went the other way. There it was. Then the SBA gets to take a look at it. Then the SBA has 90 days to approve whether or not you get forgiveness. So, 150 days, that's the better part of the, that's a third of a year, if not, almost, that it can take you to wait to find out whether or not you're going to have forgiveness or not. It says loan payments may come due while you're waiting. That would only be for if you chose the 8-week option, because the 24-week option is that that the 24-week option, you don't have to make any payments until the loan is either forgiven or however it's decided on your forgiveness application. So the director can go back and override what the lender said. So the lender may have said, yep, you're eligible for forgiveness, and they can turn it back and say, nope, we're not going to accept that. And if that happens, you do have an appeal process, and they can review the loan whether or not you even apply for forgiveness. So if you just take it as a 24-month, 1% loan and don't even apply for forgiveness, they can actually still review how you spent the money. So, yeah. So they're saying that people that had under $2 million, for a while they were saying they weren't going to be even reviewing those. Now they're not saying that, I think because they don't want us just like sending them garbage information. They want to make at least the appearance that you're going to have to prove what you did if you didn't get $2 million. So we'll see. Where did I go here? Okay, hang on, I lost my place here.
Jax, can I ask you a quick question while you're when
Yes.
are Portland taxes due? Did they get pushed out again, or are they still due July 15th?
City of Portland taxes is what was been asked, and it's still July 15th. Nothing has changed with the federal tax payment deadlines. We are still on a July 15th deadline for federal taxes, all state and local taxes for 2019. And basically have been told it will not change. And I, for one, am very grateful about that. So there's some questions. Will the SBA review individual PPP loan files? They're saying yes, they will. The self-certification is required. So that's where you're putting your signature on the line. Just, remember how you look in orange. They're going to review all loans in excess of $2 million and some percentage of those under $2 million. I love this one. Additional guidance is forthcoming, because it is. It changes every week. I got that one down. Yeah. So I did that question twice, whether they would or not. So, and this is why you have to keep your records for 6 years. They have up to 6 years to review your PPP loan. They didn't tell us this when we all signed the PPP loans. They did not tell us they were going to take up to 6 years to review them. And they could review your eligibility, the appropriateness, whether you spent it on allowable uses, and how much you got forgiven, if anything. Kind of a little bit of a disappointment that we're finding out this after all but $100 million of the money, which there is, $100 billion is still available. Sorry about that, I'll get the right amount. There is some discussion. There was a late dash of applications in the last week to 10 days that possibly may or may not get funded, and then they're going to decide what they're going to do with the other $100 million, whether they're going to give it to, whether they're going to have a new loan program or what they're going to do. But the SBA is not giving up the money that Congress gave them. So, I do want to talk a little bit about if you get loan, whether it goes to loan or whether it goes to forgiven. So, if you use any proceeds that you use for allowed expenses, basically are what they call, then become what they call non-recourse loans if they're not forgiven, which non-recourse loans means they can't come back and have you pay them personally. If you use the amounts for non-allowed expenses, it becomes what they call a recourse loan, and you then have to personally guarantee the funds and would be expected to pay it back if something happens. So just so you know that. So losses funded by the loan may not be deductible right away, and I unfortunately am probably going to have more than a number of clients who have losses on their bottom line this year. I don't like that, but I think it's probably a realistic assumption. Meaning that, yes, it proves that you were allowed to, that you really did need the PPP funds, but it doesn't allow us to reduce your personal tax liability, which is kind of a bummer. So we're going to be trying to make sure that whatever you do put in for forgiveness maximizes your tax deduction. This also, if you're one of those people that have just gotten your money at the end of June, you have almost to the end of December to spend it all, right? And it's going to take 150 days minimum to find out if you get forgiveness. Guess what? Your tax returns are due 75 days after December 31st. How am I going to do your tax returns if I don't know if the money's been forgiven or not? We're not. That's the short answer is we're not going to be on an extension. So just know that going ahead of time is that next year's tax season probably is not going to be as cut and dry as we were hoping. So the other thing is that the CARES Act directly conflicts with IRS code. In the statement that in the CARES Act, it says that the funds from the PPP loan are tax-free debt forgiveness, and that money can be used for deductible business expenses. CARES Act says, yep, you can use it, and so we get the double benefit. No tax income. I got $50,000 worth of expenses from no tax income. Awesome, right? IRS said no. That doesn't work. So Congress or the Supreme Court or somebody's going to have a battle over this because they directly contradict each other. And we don't know when, we don't know how. So just know that. So tax planning for y'all this year is going to also be an adventure in I have no idea what. We're going to do our best and hope that things come out like they should. Then this talks about the Tax Forgiveness Taxability Act. This was out of the CARES Act. No, the forgiven amount does not have to be paid back. It is not income. This is where we're talking about is the related payroll expense deductible. The IRS says no. CARES Act says yes. So we're waiting, and who knows how long that one's going to take. So, and I think that is the end of, yes, that is the end of all the, those that I have. Do we have new questions?
We do have a couple, and just so you know, I still don't have the PDFs. So, one is if people needed to have a one-on-one conversation with you about EIDL or PUA or PPP, I have been advising them to call Mary or to use the scheduler in your signature on your email. Is that correct?
No, there is no scheduler on my email. They have to call into the office.
Okay.
Especially if it's today, they have to have it.
Okay. Great. I just want to make sure I was giving good advice. Forgive me if this was covered. Can non-payroll business-related expenses be prepaid in order to utilize/exhaust funds?
Not prepaid. That you can, if they were incurred after February 15th, they can be paid back. Things can be paid. You cannot prepay things. No, that is not allowed.
Okay. Regarding,
we were trying to do that one earlier. That one doesn't work anymore.
okay, regarding quarterly estimates due July 15th and beyond, if business takes a huge hit in revenue and ultimately owner distributions, should we still try to pay original estimate projections? And if yes, what if the resources aren't there to pay estimates?
No, you should not pay those estimates. You should send, if you're one of my clients, you would send me your profit, basically the income and expenses. There's the second quarter estimates are as of May. So whatever you made as of May, you would send me those documents, and I would tell you whether or not you needed to make that second quarter payment, which is due. Oregon was actually due June 15th, and the federal is due July 15th. And then the next one is September, and the following one is January. So I am doing a lot of manual estimate calculations this year for exactly the same reason. So it's just a matter of people sending me the information, sending us a quick email saying, help, and either Mary or I will recalculate those estimates for you and give you a better number that's more realistic based on your income. So, yeah.
That is it currently.
Awesome. Cool. Awesome. So, if I did send those to you, Jess. I hope you got them. If there's no more questions, you did record this, right, Jess?
I sure did.
You did press the record button? Oh, good. Oh, good. So, because I do know I had a couple of people who said they couldn't make it today. If you have other people who have it, PPP loans that you know of, I'm not looking to get new clients. I'm not doing it for this, but need this information that are friends of yours or other business owners, let me know. I'd be more than happy to send them. Jess is going to show me how to put it on YouTube, but I'd be more than happy to send them the link so that they kind of have the basic information and know what's going on and hear some of the questions that were asked and the answers that we gave. So, yeah. So that's all you got to do is ask.
Great. And just because there are gremlins, I do not have an email from you, but I am happy to walk you through how to upload the PDFs directly into the chat.
I did.
Okay.
Chat to everyone, right?
Yep. So then you would have to, or is it, what format is the
They're in PDFs.
It's a what?
It says they're PDF files.
Okay. Great.
I just did one. Did it come through?
Yes. Congratulations. High five. One worked.
Okay. I wonder if it's because I didn't do them individually. I did them as a group. I wonder if that made them.
Yep. That would be it.
Oh, they don't like groups?
No, Zoom's already trying to conquer the world, but one thing at a time.
Okay, fine. Yeah, you guys are so. I'm getting both the applications and the instructions on the forgiveness applications. So just so you know that, if you feel so inclined to read the instructions, sometimes there's really good tidbits in there.
Do you have a preference? I'm asking as a client now. Haha.
Uh-huh.
If mid-July is when we're supposed to be filling out the application for the forgiveness, do you want us to do anything before scheduling an appointment with you?
Yeah, I'm going to send you, I'm going to also upload a spreadsheet for y'all to use to calculate your payroll. So there's a spreadsheet to do your payroll with and make sure that your payroll is done. I can't seem to find it. COVID resources. So you have to know, so just because most of y'all are my friends and clients, is that I had to renew my license today for my CPA license, and I'm supposed to have 40 hours a year of continuing education. I have had 40 hours of continuing education since April.
Whoa.
And I was like, oh, no wonder I feel like I've been running from here. And it's all COVID tax implications, PPP loan, it's this whole list of things all related to COVID-19 and the CARES Act and the taxes and all these other things that we're dealing with right now. So it's been fun. Yeah. So, okay. Anything else?
Nothing on my side.
So I guess I probably want to leave these up to allow people a chance to download them, right?
Yes.
Yeah, I should probably do that. There was one person that asked about an online portal, and when you download there's some applications. There's the fillable application. I think if you were to go and whether or not how I would look at it before they uploaded it, and I think I would just fill out the fillable application. You don't have to put in all the name, social security number, all that stuff, just the numbered parts of it, and let me see the number parts of it. Says it's one client who says Umpqua is doing it online, so there may be other ones that do that as well. So if your bank does do that, my suggestion is just take the fillable PDF, give me the number information. Now, I don't care about the the loan amount, the day you got it, and all that other good stuff, and the rest of it we can deal with. You'll have to do it when you put it online. So that makes sense. And if you don't want to do any of it, and let us do all the paperwork of completing your forms for you, there's a separate engagement for that. Email me sooner rather than later so we can get you an engagement letter and tell you all the things we would need, and we would do them, but I think most of you all know what you're doing enough that I can just review what you do and it'll be fine. Okay. Awesome. It's nice to see some of y'all. Oh, wait. I'm just gonna,
You're getting love in the chat room.
I know, I was gonna actually unmute you all so you could say, so you could give me loves, because I am a Leo and I'm like trying to figure out how to do that, Jess, and I can't do it.
Oh, they can unmute themselves, or you click the button. You can, I will do it.
That's probably easier.
Ask all to unmute.
Ah, there you go. Is that what you do? Okay, there you go. Okay. So,
thank you, Jax. Appreciate everything.
Thanks.
Yeah.
Thanks, Jax.
Thank you.
Hey, all. I'm glad to see your smiling faces, if nothing else.
Good to see you too.
Okay. Oh, look, I just got a thing. The county is applying. It's got new grants for people. Oh, boy. We'll see what happens there.
Well, you can forward that along.
Nope, you're not in Clackamas County. Sorry, Deborah.
Okay, you can keep
Sorry,
that.
it's Clackamas County. Sorry. I get
Well,
to
you
keep
know,
that
we
one.
serve all over, you know.
Yeah, I understand. Oh, and Deborah, there are some whole different rules for nonprofits. I didn't even go into that, so we'll chat.
Okay.
I guess I should have mentioned that before. There are different rules for nonprofits. So, okay. All right. So I will see you all soon, I hope.
All right. Thank you. Have a good week.
See you later.
Yeah.
Okay.